not participated in this China rally, which has been mainly concentrated in the onshore A-share markets.
Okay. Nevertheless, the China contradiction is a little difficult to understand for an Indian investor. When we speak to economists like Chetan, they are continually telling us that China is going to do worse with each passing year in terms of GDP growth. And yet we saw this extraordinary performance in the stock markets. Do you think that stock market performance won't sustain?
Well, if you look at the A-share market, we've argued that the risk-reward has deteriorated and that going forward it's getting less attractive. For the offshore market, the MSCI China, we downgraded from overweight to equal weight recently. MSCI China had outperformed emerging markets about 4,000 basis points over a year. So again, in terms of booking profits on that and rotating towards India that had underperformed recently, that's what we've been trying to do.
Okay. But with the MSCI index getting recast and possibly A shares of China being included in that index, could there be a pull of money possibly intended towards India going towards China for a tactical gain?
Well, we'll find out about that tomorrow. We think it's a close call. We don't know for sure what's going to happen. But even if it does happen, there is probably only about a 1% of the MSCI EM benchmark shift that's likely to take place. So China A shares will not come in at a full market capitalization initially. They'll apply probably a 5% free float weighting. And 1% is a tracking error. It's the size of a market like Poland, which investors either decide that they want to be in or they don't. I really don't think it has a particular significance for India, this event tomorrow.
What is your forecast of China, Chetan?
So if the headline number is something that we have to try and predict as to where the official numbers will be, so that's around 7. But the industrial China, or the one which matters for the rest of the world, which is what is measured in MS checks, as we call it, is in a recession condition. Or the other number to look at would be non-oil import growth in China. That's averaging about minus 15% in the first 4 months of the year. So, I would say that we rather look at these indicators to know what's going on China in terms of growth trajectory.
Okay. Well, last 2 questions to you since I'm being warned. Chetan, considering the kind of inflation forecast you have, how many more rate cuts are you expecting from the Reserve Bank?
We're expecting another 50 to 75 basis points by March 16.
So what might be either the 10-year yields or base rate for that matter? You see that also falling by about 1 percentage point, the cost of money in India for borrowers?
That's right. I would say that you have to look at the weighted average yields on loans and advances. That would probably be down by about 75 to 100 basis points. And the other measure could be looking at commercial paper rate, which is already actually down quite significantly. That could also be down by another 75 to 100 basis points in another 6 to 7 months' time.
Well, you are in good company. Aditya Puri of HDFC Bank also told us that he expects base rates to fall by about 100 basis points, or at least 75 basis points in the next 12 months. Jonathan, last question to you. You gave us an earnings forecast. How much do you think the Nifty or the Sensex might gain in the next 12 months and in the next 24 months, if that's a more comfortable time period?
I think getting back above 30,000 on Sensex is really quite likely, and that's the target that my colleague Ridham Desai has. So weighted scenario probability of going back above 30,000 on Sensex a year from now would seem likely to us.
Okay, but more in terms of equity returns over the next 12, 24 months?
Well, I guess you're going to see probably sort of reasonable double-digit returns from here for the dollar investor and the investor, given we think the rupee is likely to be reasonably stable.
Okay, so can we, would it be realistic to expect a 15% equity return in the next 12 months and another 15 thereafter as well?
I would say 10 to 15% 12 months out, and then obviously we'd want to review the situation. But that is much better than the forecast we have for emerging markets overall, where we have maybe 3 to 5% upside.
All right. Thank you very much, gentlemen, not only for cheering the market, our sentiment up. I also hope that you have a very successful conference.
Thank you. Thank you.
Well, back to you, Sonia, Rima. I think this is a very positive comment coming from Morgan Stanley at a time when the indices have touched the lowest point in 2015. It's about a 10 to 15% gain at least that Morgan Stanley is expecting in index market gains, and for the economy itself an inflation of 4.75, at least 50 to 75 basis points rate cuts from the Reserve Bank, and GDP growth which is 1 percentage point more this year and another 1% in the coming year. So that's a very positive start to the trading day at least.
Oh yes, it is, Lata. Very comforting views coming in for the bulls.